Hello everybody. So in this video I want to give a quick update on First Republic Bank and what is currently happening. This is interesting to me and to the channel because as these banks fail, and this is very unfortunate, and you know, I've been saying for the past year and a half that raising rates too fast is a bad idea. But you know, the glimmer of positive light is that this may move the Fed to stop. That's at least my hope, because if they don't stop, that is going to continue, in my view. And CNBC is reporting today, as of a few hours ago, that yes, First Republic is most likely headed for FDIC receivership. When I published my video on this 2 days ago, there was still hope that this would not happen, and it was just chatter on Twitter, and now it's CNBC reporting this. Now it is Reuters reporting this, saying that U.S. officials, including from the FDIC, Treasury Department, Federal Reserve, are coordinating meetings with other banks to broker a rescue plan for First Republic, and they're trying hard, but if not, a FDIC may be in place. That is what at least CNBC is reporting, and of course it's trending on Twitter and social media, and this probably doesn't help. This probably doesn't help because, anyways. And the question that I'm trying to answer is, how much money is there left in the FDIC? Again, very, very, very important to know that. I from the last statistics I saw, there's about $14 trillion of deposits at U.S. banks. You know, there's thousands of banks in the U.S., many of which are not this big, right? Many banks are regional, smaller banks. But how much money is there left? So Signature Bank cost $2.5 billion to the FDIC. SVB, Silicon Valley Bank, cost $20 billion. And the current balance, so as at the beginning of the year, the balance was $128 billion. And so if you remove $2.5 billion and if you remove $20 billion, that would mean there would be about $105 billion left. Now that's back of the napkin math. It may be a little more, it may be a little less. It's tough to know, but the First Republic, right? First Republic Bank is slightly bigger than SVP, and in fact, if unfortunately it were to to go bankrupt, that would be the second largest failure in banking history, and SVB, Silicon Valley Bank, would actually now be the third. It would have been the second biggest bank failure for only a few weeks, which is crazy if you ask me. And here's another question that I wonder, and that I think I'm not the only one, is what happens to the $30 billion in deposits that were made by JP Morgan and Bank of America and Wells Fargo and 11 banks total, US Bank too, right? A lot of the list is over here of all of the banks that helped. A lot of major names got together and lent $30 billion to help First Republic, and I think this was the right thing to do. But you had mixed messaging, with on one hand people saying, "Oh, there's no bailout at all," and on the other hand, the industry trying to help each other. And you know, that's going to be the big question. It's like, does that FDIC money cover a $5 billion deposit for JP Morgan? That's going to be, I think, a major question of the next few days. And you know, here's another crazy thing is when we got news of First Republic being in trouble 2 or 3 days ago, and that stock was down 49% one day. The forecast of a 25 basis point hike, the hike forecast was down on the FedWatch tool, but I have bad news. It's back up. 84% chance that we get a 25% basis points. And this is so unfortunate to me. And because the more hikes we have on the guiding interest rate from the Fed, the more people will have an incentive to move away from the regional banks into the big banks, because people are now, with the internet, the speed of information is hyper fast. People are now hyper aware of what can happen to a bank if it's not in the top 5. People are hyper aware, so we're going to see more deposits flowing if they keep raising the rates. in my view, I think that's what's going to happen. But also, more people will move money to treasuries. Yes, because new treasuries that are getting issues will yield more, so people will move money to treasuries. And of course, if you buy government bonds, that money is not going to be sitting in a bank account. And so I fear that the Fed is going to hike rates again, as if this was not happening. And this is the last point I'll make. And I haven't talked about Bitcoin at all when discussing this topic, but there's evidence that a lot of these phones, if you gotta move your phones fast and you don't have time to open a second bank account, there's a lot of evidence that people are actually buying Bitcoin, right? With those phones, and we saw that during the SIVB collapse. And I have to wonder how much of that price hike in Bitcoin has to do with people moving money out of banks, because Bitcoin is very easy to purchase. It's extremely easy to purchase. It's not like opening another bank account and doing a whole new paperwork to have another bank account. So I wonder that as well. Anyways, this is a sad story. I do not like seeing this. I hope this does not happen. I hope they find a solution and the contagion doesn't spread. And just so you know, if FDIC receivership is announced, it should be either tonight or Sunday night, to the best of what I can tell. But hopefully it's a deal that is announced and not a receivership. So this was not investment advice. Not even sure this was entertainment, or at least this is sad entertainment today. This is sad entertainment. Please like, please subscribe. Appreciate you watching my channel and supporting me. Thank you. Have a great day.